Alibaba has declined more than 70% from its peak because of many reasons, like the Chinese Communist Party with its regulations, and many businesses from China were affected, the fear of delisting from New York Stock Exchange, and a massive decline in their earnings. And despite all these bad things, I've decided to go all in Alibaba, because now I see Alibaba as a great opportunity to invest in. At the current price, the risk is very low and the reward is pretty high. You can have 3x on your investment in just 2 or 3 years. And in this stock analysis, I'll explain why I believe in this business, I'll help you to see their business model, their fundamentals, what opportunities they have, and the risk for this company, and also how to avoid the risk they have. So stay with me to the end of this video and you'll find this stock analysis, the outlook for this business, and why Alibaba is a great investment. And if you find value in this video, please give a like and subscribe to see more videos like this because I want to succeed. Let's begin. Alibaba, as you know, is a company from China which also provides its services internationally, and their business model is like this. Imagine Alibaba like a company with a lot of businesses around it, as an ecosystem. And their main business is their e-commerce segment, which is the biggest of around 70%. And in China, they operate more e-commerce websites, where they provide different services to consumers and merchants. The biggest of them are Taobao and Tmall. Maybe you heard about Taobao, a well-known website from China which helps merchants, small businesses, to sell their goods to consumers from China. And over the years, they have been developing new services, and there are over around 980 million Chinese consumers who use their websites. And the second part of their e-commerce business is international, where they also have more websites like AliExpress, Lazada for consumers, and Alibaba.com for businesses, which want to buy in large quantities. And here they have over around 300 million consumers. And this part of their business, international, is growing very fast. And another fast growing business is Alibaba Cloud, where they have a growth rate of around 20%. They operate this business more in Asia, because in the USA and Europe, there are other big players. Another business segment is digital media and entertainment, where they provide more content services. For example, Youku is like YouTube, where people can share videos. This is a more strategic segment in order to have access to consumers and promote other services they have. For the moment, the growth rate for this segment is flat, but you never know what they can do in the future. In addition, they also have other businesses related to logistics and delivery in China, and also international, plus other innovations. And about their financial services, Alibaba owns 33% interest in Ant Group, where you have Alipay, a well-known app for making transactions and other financial services. So the most important businesses for Alibaba now, because you might see new innovations in the future, are their e-commerce business and cloud. And Alibaba has more segments they make money from. As you can see, the biggest one is China commerce, which is still growing. And the second one is international commerce, which is growing very fast, and they want to expand more this segment. And another important segment is cloud, which represents 8% of the total revenue. And also here, the growth rate is high, of around 20%. Another segment is Sanyo, where they provide domestic and international logistics services. The next one is local consumer services, which includes location-based services. And another one is digital media, which for the moment the growth rate is flat, and they keep making investments in this part of their business. And the last segment is other innovations, which represents over around 1% of the total revenue. So as you can see, their e-commerce business represents a big part of the revenue. Now let's see their fundamentals. Alibaba has a market cap of around 242 billion and pays no dividend. The revenue is expected to grow from 109 billion to 165 billion by 2024. And with the growth they have and the investments they are making, is likely to happen. And the earnings, you see a decline from 23 billion to 15 billion, and then they are expected to grow a little. These are analyst estimates. They project these numbers based on the current situation. If the economy from China is doing bad and the company is facing problems, they project these events in the future. And as you know, there are ups and downs in every economy and company. And what I want to say is that you can expect their earnings to be higher than expected, because in the future the economy will improve. If you look at their free cash flow, for 2020 they had 23 billion and for 2021 they had 35 billion. These represent over around 30% of the revenue. And let's say 25 for future free cash flow, to be conservative. So in 2024, they will have over around 41 billion in free cash flow. And this money can be used for other investments, which will create more value for shareholders. and the total assets are 253 billion, around the same level of their market cap, and they have 76 billion in cash plus 67 billion in investments, and the total liabilities are 90 billion, of which the debt is 22.3 billion, and with the cash they have plus their free cash flow, they have no problems with the debt and future investments, so they have great fundamentals. Now let's see what opportunities they have and the risks for this company. The great thing about Alibaba is that they have a stable, proven business model. I mean, in China, they have a great moat for e-commerce business. They have over around 980 million Chinese consumers, and they are still growing. And the population in China is over around 1.4 billion, so they still have over around 400 million new customers to reach. Plus, the average salary per month in China is over around $1,200. And as you know, China is an emerging market. This means they'll grow more in the future. Their GDP is expected to grow more than 5% a year. And if the average salary doubles, also the revenue for Alibaba will double in China. So you have growth from the new customers of around 400 million and growth in their wages. Their economy will grow more in the future. Now, the second opportunity is their international e-commerce, where for the moment they have 300 million consumers. And worldwide there are 6.3 billion people without China. And Alibaba can easily reach 1 billion in international customers. Their target is to have 2 billion customers worldwide, and for the moment they have 1.28 billion, and I'm sure that they can reach that target and even more. I don't know if you had an e-commerce website or a business in this area, but if you look at all the websites from this industry of e-commerce, you'll notice that many of them buy their goods from AliExpress or Alibaba, because they have cheap products and they can sell them in developed countries at a higher price. I mean, most of the businesses from Shopify, a platform which allows you to create your own online store, buy products from China, especially from AliExpress and Alibaba. Just search on YouTube about selling online and you'll see that many of them are using AliExpress or Alibaba. Another big opportunity is their cloud business. They have a big market share in Asia of around 37%, followed by Huawei, Tencent and Baidu. They are the leader, and this market of cloud computing is expected to grow even more in the future. I mean, by 2024, it is expected to double. And another good news is that they increased the amount used for buybacks from 15 billion to 25 billion. And they've used for buybacks only 9.2 billion. And there are 15.8 billion left, which will be used in the next 2 years. And at the current market cap of around 250 billion, it represents over around 6.3% return from buybacks. Now, it depends at what price they are buying. The return can be even higher or lower. Plus, Alibaba keeps investing a lot in their ecosystem. They are developing, trying new things, and you never know when the next winner will be on stage. And another great thing is their management, which really takes care of their customers. They had that big decline in their earnings because they lowered their prices in order to support merchants and consumers during their bad economy, and they also increased their investments in other opportunities. So that decline in their earnings was a healthy action for future returns. I'm not sure if you know, but Jack Ma comes from Jack Magic, which wants to build a company that lasts for more than 100 years. Now let's see the risks for this company. As you know, the major problem was, and it is and it will continue to be, the Chinese Communist Party with their regulations. If you look in the past at Alibaba, they faced a lot of problems with the regulations. It's an ongoing battle between Alibaba and the Chinese Communist Party. And if you look at the stock price, you can see those ups and downs. When they face problems, the stock price goes down, and all people say this is the end for Alibaba. And then it rebounds, and all people rush to buy Alibaba. And you don't have to be afraid of those regulations. Those will come and will go. I mean, Alibaba will adjust their business in a way that can handle those regulations. Plus, the Chinese party doesn't want to kill its big winners. They just want to have a better control over their country. And you might see new regulations which can affect many businesses from China, but this will be on the short term. I mean, if a company has the resources needed, they can adjust their business, and Alibaba has a lot of resources. And the second risk is delisting Alibaba from the New York Stock Exchange. I'm not sure if you know the story, but everything started from Donald Trump's administration, when the former president signed an order which demands more transparency from Chinese companies. And you see a lot of news related to this risk. And I'm not afraid of this risk because of two reasons. Donald Trump is out. I mean, he can no longer come up with new regulations for Chinese companies. And the new administration, from what I've noticed, is more open to negotiations than the former one. And even though they choose to delist Alibaba, they'll lose a lot. I mean, there are a lot of investors which own Alibaba on the New York Stock Exchange. and others who want to invest in. And now it comes the second reason. If they delist Alibaba, those investors will go to the Hong Kong Stock Exchange. And the New York Stock Exchange won't be able to generate new fees and commissions from major companies like Alibaba. Plus, this means a new trade war with China. And I don't know if the USA wants something like this, because they will be affected on many sides, and it's better for everyone to negotiate. And if you own Alibaba on the New York Stock Exchange, be sure that your broker allows you to exchange those shares to the Hong Kong Stock Exchange. In this way, you are protected against this risk of delisting. I'm using interactive brokers, where I have access to all markets around the world. There are some brokers which don't allow you to buy stocks in every market. And check out my link from my description if you are interested in this broker. By using my link, you also get a bonus. And another risk is VIE, which means Variable Interest Entity. This structure allows Chinese companies to raise funds overseas. I mean, the Chinese Communist Party doesn't allow you to own assets in China. And they found a way with this VIE structure to allow investors to invest in China and to enjoy the profit generated by those assets. I mean, they don't allow you to own the asset, but they allow you to enjoy the profits. And there is the risk that Chinese Communist Party will stop foreign investors from using this structure. But it's unlikely. It's like you tell the world, I don't need your money. And their economy will be affected if they decide to stop foreign investors. And I don't think this will ever happen. You never know. That's why you have to know all the risks before investing in something. And there will be other problems, but many of them will be on the short term. Now let's discuss about investing in this company. As you can see, Alibaba has had a massive decline, and many people say that this is the end. But in fact, this is a great opportunity for you to have a great return on your investment. And to avoid losing money over time, when you invest, you also have to see the risk and the reward. What can happen? Because if you invest at the wrong time, in a bad business, you can lose a big part of your money. So the risk of investing in this business, I mean, if you are already invested and you are down 50% or more, then the biggest risk for you is not buying more. Now with bad headwinds, I mean a bad economy, Alibaba can go to 200 billion in market cap. But this can happen on the short term. And the reward, as you saw the estimates, Alibaba can reach over around 40 billion in free cash flow by 2024 or even more. And if the price to free cash flow is around 20, as it was the average in the past, you can have 800 billion in market cap. And now the market cap is around of 242 billion. This means 3.3x on your investment in just 2 or 3 years. And this high return can be achieved with almost no risk. Plus, Alibaba is a business which keeps growing, and if you invest for a longer period of time, then your return can be much higher than 3x. I mean, Alibaba has the potential to have more than 1 trillion in market cap. Anyway, at the current price, if you invest around this level, when the market cap is around 300 billion or below, you'll have a great return on your investment. And that's why I'm all in Alibaba, and I keep buying around this level of 300 billion market cap or below. There is almost no risk and the reward is pretty high. You have a business with a great moat in China, they have great management and the business keeps growing. And you also have a margin of safety of around 50%. And when you find an opportunity like this, you can take advantage as I do. And if this major decline in the stock market, if it continues, I'll be able to find more opportunities like Alibaba, to have a great moat and a margin of safety. And remember what Jack Ma said, today is difficult, tomorrow is much more difficult, but the day after tomorrow is beautiful. Most people die tomorrow evening. And tell me in the comments, where do you see this business in the next 10 years? And if you find value in this video, please give a like and subscribe to see more videos like this because I want you to succeed.